Welcome to our pre-budget specials. For all of us, budget is all about taxes. Can we expect some cuts in income tax, in other taxes, and what other tax-related changes? Joining me now are Dinesh Kanabar, the CEO of Dhruva Advisors, and one of the leaders presenting the tax proposals for FICCI. Also joining me is Sudhir Kapadia, the partner, Tax and Regulatory Services at EY. Gentlemen, good morning, and thank you very much indeed for your time. Mr. Kanabar, I'm going to start with something which Money Control reported, that the government is planning to raise the minimum threshold for taxes from the current 3 lakh rupees. We don't know 4 lakh or 5 lakh, but you have done some elaborate calculation. How much is the loss? Will the government be able to afford it?
So thank you, Latha, for having me on the show. And as you look at the individual tax proposals, probably this has been an ask which comes up every year. There was a huge expectation even last year that the government would sort of raise the threshold level. There are 2 regimes, as you know, Latha. Today we have the old regime and the new regime. Fortunately, the government wants everybody to converge onto the new regime so that you don't have a lot of deductions and exemptions that you are asking for. But in either regime, every 1 lakh rupee reduction or other increase in the threshold limit would lead to a reduction of tax revenue by about 14,000 crores of rupees. And remember that while this about between 13.5 and 14,000 crores is an approximate number, that leaves a lot of money in the hands of the individuals. That money goes back into the circle for spending. That results again in a higher GST collection. So it is not 14,000 net going away, but really just from a direct tax perspective, that 14,000 crore is a number, which looks like a more approximate number for every 1 lakh rupee increase in the threshold limit.
Fair point. And I think the last time this bottom was revised up, if I'm not mistaken, was I think 2017. I could be wrong, but Mr. Kapadia, your sense, you know, inflation has eaten a lot from 2017 onwards. We have had some years of even over 6% inflation. Is that a fair expectation now? And as Mr. Kanabar's team has calculated, 14,000 crores gross is what the government will lose. So would you place a high bar on this expectation?
Well, the question is why now? Shouldn't it have been done before the elections if that was the the whole purpose of giving these? So anyway, but leaving that aside, I don't know if 14,000 crores would be really a big benefit or not, but I think the larger question is that are we now ready to come out with a clear mandate to say, let us not have a choice, but simply have only one simplified personal income tax regime without any major deductions and exemptions, and in lieu of that, have the lower rates across at least the lower slabs, let's say up to not 15, but even going up to 30 lakhs, to give relief for those income earners for whom those deductions will no longer be available. Like when we had GST, we talked about a revenue neutral rate such that government doesn't loses, and at the same time it is, for commodities, etc., which common man uses, it is not burdensome. Similarly, we can do an exercise of a broadly revenue neutral slab rates, as I said, let's say up to 30 lakhs, and just have one simple, real thorough, 1-page tax return form for compliance. That would be real reform.
Okay. Yeah, actually, Mr. Kanabar and the FICCI team has put out a lot of ease of doing business requests. And I take your point that why should the government reduce now when they didn't cut before? But this is not necessarily only a populist thing. We got the GDP numbers on May 31st, well after the elections were underway. And one of the things that clearly stand out is personal consumption is growing much slower than capital formation. So there may be some ask over there. The election results are also being interpreted as pain at the bottom of the pyramid. Okay, Mr. Kanabar, the other big expectation from the market, we do not know whether the government is in a mood, rationalizing capital gains. What can we expect? What would be the best way out?
Latha, as they say, sometimes that be careful what you wish for. And the point really is that we today do have multiple rates, we do have multiple holding periods, we have a distinction between the rate of tax payable by residents and non-residents. And even as we are putting together this whole chart and sharing it with you, Latha, you could see the complexity involved, and therefore rationalization is indeed needed. But rationalization towards what is going to be an issue? The fact of the matter is that the markets have stabilized, the markets are looking, and the government is looking at huge amount of FDI. A 1 year, a holding period has been regarded as long-term for listed equities. The question is, can a similar period be also provided for unlisted equity? How should we look at real estate? So maybe some degree of distinction between equity and real estate may be warranted. But really, even within equity, do you need to make distinction between listed and unlisted? And do you need to have multiple surcharges? Do you really need to have separate rates for resident and non-resident? Those are the asks. But as I'm saying that, be careful. I think the most important thing, just getting back to FICCI, and which you mentioned about, our ask was stability. Our ask was that we should not see changes year on year on year. We need to communicate to the world that India is a stable tax regime. So I would rather work more towards that than go on asking for concessions and anything else.
Okay. No, there was a big fear that actually the STCG could be increased on equity. That was what scared or will scare the market if it happens. Mr. Kapadia, any inputs on this?
No, see, the major change which we have seen, which has been introduced, is in the debt space to have a level playing field with banks, which was the ask for the banks, from the banks, as we know. I think that part of the reform has already been attended to. Real estate keeps coming up, and it's counterintuitive that is really 2 years holding period long term. When you look at an asset like real estate, it used to be 3 years. To give impetus, you made it 2 years. It's neither here nor there. I don't think there's much scope for tinkering with the rate per se. Long-term capital gains tax for listed at 10% is one of the most attractive around the world. The market seems to be not having enough, there's more money than you want to have in the market already. So where is the need to give further incentive on that? If at all, is 10% really too low when the gains are too high? That could be the question. So I don't know what exactly is the expectation on capital gains tax. Simplification, yes. Certainty, yes, I agree. I think tinkering with rates just doesn't make too much sense at this stage.
Fair point. Actually, we saw this almost over 20% jump in income tax year on year, FY24. What we understand, and this is a Hindu Miscellaneous article, but we could all get that data. Much of that income tax, it's a doubling of capital gains tax in that income, which is one of the big reasons why income tax has gone up so much. So, why disturb something that's working so well? Seems a good argument. Mr. Kapadia, what would be the other big ask for you from the budget?
See, we have talked a lot about innovation and R&D, and income tax is not certainly a driver for this, but it is one of the very important incentives which governments have given. Countries have given around the world. We attempted something, it's a little known provision on patents way back in 2016. Our analysis suggests that it has not been really helpful in any way because of the restrictions. For example, I can only use patents for earning royalties, which is, I think, very, very myopic in that sense. So the suggestion here is you had a good incentive, it's not working. We should expand it. It should be extended to anything which I earn, even through patented products, for example. If you really want to kickstart innovation and be competitive in that sphere. So I think something more meaningful, either have something or, then you not have it if it is really not working. The second is you mentioned about the debate around disposable income, and the other is employment. Now there is a section, again, which was introduced 8-10 years ago to encourage more recruitment by businesses, ATJJAA. But the threshold limit for salaries is very low. 25,000 rupees is really low. I think that should increase to really give that incentive to employers and help employment generation in the organized sector.
Okay. Well, incidentally, IT companies are accused that their minimum salary, at which they have been recruiting for the last 10 years, is 3 lakh your 25,000. So perhaps there is an incentive to raise that. But Mr. Kanabar, again, now out of time, so we will, of course, invite you for a more detailed conversation. But much of the FICCI requirements are simplification. Can you highlight what y'all want most?
I think the one issue which keeps on coming up every year, and this year we seem to have a fair degree of acceptance, at least when we are communicating, is how do we resolve disputes sooner rather than later? Yeah. Today we have, what has happened today is that we have litigation piled up at commissioner appeals levels. The tribunal probably is almost up to date. You could file an appeal before tribunal. But again, everything goes all the way to High Court and Supreme Court. And the question is there a way in which one can resolve disputes far faster? Is there a way in which one can put a settlement proposition where everything does not need to go all the way to litigation? So a number of asks here. One was that a dispute committee has been set up, but it has not yet been implemented. It's been out there for a year. Members have not been appointed. And that again is for small taxpayers. So the one ask was that can this committee be activated, number one, and number two, can we ensure that this committee takes up not just smaller disputes, but a higher level of disputes? And the other question was that can we get up the threshold for things that need to go to the court? A lot of work has happened in this, but can we really look at that not everything needs to go to the High Court and the Supreme Court? Once a tribunal has passed a judgment, can resolution come to an end? Because government is today the biggest litigation. And again, is there a way to settle dispute outside of the framework? Can there be a committee to resolve disputes? So those are the sort of framework of what we are discussing.
Okay. Yes, gentlemen, out of time. This is just a teaser. Picture abhi baki hai. So closer to the budget, we will invite you again to check out what we may reasonably expect. This is the first year of a 5-year term. So some very important measures like dispute resolution or like simplification that Mr. Kapadia spoke about can be put in place, and you can see the benefits in your own term. So maybe we should expect those kinds of changes. Wrap up on Bazaar on that note. Chartbusters coming up.